According to Charlie Munger, the current state of the market is similar to that in the 1970s, when inflation was out of control and the Federal Reserve was forced to do whatever it took to bring it down, even if doing so caused a recession. Munger wonders if the Federal Reserve will have the long-term political support necessary to implement monetary policy changes to reduce inflation. Let's learn more about his techniques in this video. Will there be a recession in 2023? Before recovering from having a positive GDP in 2022, the U.S. did experience 2 consecutive quarters of declining GDP, primarily because of the high price obtained from energy exports. Based on several reasons, there's a very high likelihood that the United States will have a recession in 2023, regardless of whether experts or the government think that we had or are now experiencing one. High interest rates, high bond yields, high inflation, an increase in layoffs, and declining company sales and earnings cause a recession. Less money available for consumers to spend on discretionary items leads to a domino effect in the economy that slows down the flow of funds into channels for discretionary expenditure, as funds are used to meet basic requirements like food, rent, and mortgages. High labor expenses, wholesale pricing of goods, material costs, and energy bills significantly reduce corporate profit margins, leaving little money for capital expenditures for facility and equipment upgrades and business expansion. Along with the historical GDP and jobs figures, which also give us a high possibility of a recession, these are all significant economic reasons weighing heavily on the country. When a recession strikes, what should you invest in? People should consider an inflationary climate while investing, since this high-probability recession is likely to happen while the consequences of inflation are still being felt. CNBC interviewer asked Charlie Munger, "How will this all play out, and what's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities?" Charlie responded, "It may be that you have to choose the least bad of a bunch of options that frequently happens in human decision-making. The Mungers have Berkshire stock, Costco stock, Chinese stocks, a little bit of Daily Journal stock, and a bunch of apartment houses. Do I think that's perfect? No. Do I think it's okay? Yes. The great lesson from the Mungers is you don't need all this damn diversification. You're lucky if you've got 4 good assets. If you're trying to do better than average, you're lucky if you have 4 things to buy. To ask for 20 is really asking for an egg in your beer. Very few people can have enough brains to get 20 good investments." Munger recommends putting all your money into a small subset of your most excellent investment possibilities. He constructs his investments with everything in mind from the beginning, rather than waiting for macroeconomic conditions to change before reallocating his cash. His little portfolio is already well positioned for inflation, a downturn, and a strong economy. What goods are most profitable during a recession? Consumer staples like food and cleaning supplies, think of what you would find at a standard grocery store, are the products that sell best during a recession. People will prioritize necessities like food, shelter, transportation, utilities, and insurance during a recession or a period of high inflation, leaving less money for more significant discretionary expenditures like appliances, new vehicles, or home upgrades. Additionally, fewer people are dining out, and many purchase groceries and cook at home. The greater issue arises when stagflation results from excessive inflation in an economy that is experiencing a downturn. The worst-case scenario occurs when persistently high inflation, high unemployment, and sluggish demand affect a nation's economy. Companies' revenues are down, but their costs are rising, eroding even supermarket and dollar stores' meager profit margins due to increased labor costs and the cost of goods at wholesale. Companies that can endure most of these challenges make up Charlie Munger's portfolio. Many of the businesses owned by Berkshire Hathaway provide products that consumers frequently require and therefore have some negotiating leverage. Insurance is Berkshire's largest major industry, and it is recession-proof since consumers must maintain their insurance regardless of broader economic conditions. In times of market downturn, Berkshire also leverages the cash flow from its insurance operations to raise money to purchase value stocks or even whole companies. Warren Buffett, who works for the corporation, is the best stock picker in history. As a result of selling a wide variety of goods at the lowest cost possible, Costco is primarily a recession-proof company. Most of their revenue comes from membership fees, and they want to break even with their retail business. They do possess the ability to change their membership costs as necessary. Before the epidemic and the escalating political tensions with the United States, His Chinese equities performed excellently and represented a gamble on the rapidly expanding Chinese economy. His apartment buildings are a solid inflation hedge since real estate assets often increase in value or, at the very least, maintain a level of value with inflation. Apartment rentals are beneficial during a recession because individuals still need to reside someplace and make rent payments. His ownership of newspapers might constitute a legacy holding. In 2002, this was a horrible business strategy. In the near term, 3 out of 5 excellent investments aren't terrible, and because he played the long game, he's now a billionaire. Investors would be well to take note of his success-oriented ideals. That concludes today's video. Thank you for watching until the end, and we'll see you in the next one. Goodbye.